Good afternoon, everyone. You are welcome to this webinar on the topic driving value through effective fixed asset management. We are organizing this webinar to further engage on a thought leadership that we published earlier this year. In the thought leadership, we highlighted some leading practices for effectively managing your organization's fixed assets. For those of us who are yet to read this thought leadership, we have mounted a QR code. You can scan and have access to it. We will also share a link to it in the chat so that you can even reference it after this webinar. Prior to this webinar, we shared with you a form to complete. The purpose of the form was to get you registered to this event and as well gather some insights into your organization's fixed asset management practices. We will take opportunity during this session to discuss these insights. I must say that if you have any question in the course of the session, please put them in the chat. We will get our panelists to respond. On this note, I'll go ahead and introduce our panelists. We have 4 key panelists to be with us today. First, we have the partner and lead of the Accounting Advisory Services Unit here in KPMG. He has over 17 years industry extensive experience. His expertise span accounting system implementation, business process optimization, finance function transformation, and of course, fixed assets management. He has over the years helped clients enhance value and be ahead of their finance function. He specializes in leveraging technology to streamline the finance function, including streamlining fixed assets management. With your reactions, help me to welcome Randolph Ano. You're welcome, Randolph.
All right, thank you, Benjamin, and good afternoon to everyone. Great to be here.
Right. Now to our next panelist. We have a senior manager also with the Accounting Advisory Services Unit here in KPMG. He has over 14 years experience. His expertise span business process optimization, finance function transformation, and fixed assets management. He has over the years led capacity building programs, both for finance and non-finance professionals. He has helped clients refine their business processes and also create value from their assets. With your reactions, let's welcome Stephen Berchi. You're welcome, Stephen.
Thank you, Ben, and good afternoon, everyone.
Right. You're welcome. Next on our panel, we have the only female, a manager with the tax unit, also here in KPMG. She has over 14 years extensive experience working with clients to navigate their tax responsibilities and opportunities. Her expertise span business tax compliance, regulatory and advisory services, including transfer pricing services. She has led projects to help clients align their fixed assets management with tax regulations. Help me to welcome Priscilla Muniratu Asebila. You're welcome, Priscilla.
Hi, Ben. Thank you for the introduction. It's my pleasure to be here, and good afternoon to everyone.
Right, you are welcome. And then finally, on our panel, we have an assistant manager with the Accounting Advisory Services Unit here in KPMG. He has over 6 years experience, and his experience span business process optimization, sustainability reporting, and fixed asset management. He has practical experience in helping clients optimize their fixed asset management practices and processes. He has supported clients with asset verification, tagging, and reconciliation. Join me once again with your reactions to welcome Michael Adotremi. You're welcome, Michael.
Thank you very much, Ben. Happy to be here. Good afternoon, everyone.
Right. You are all welcome, panelists. Now let's dive right into the discussion. Here we will take responses from all our panelists. We will start with Randolph, followed by Stephen, then Michael, and then we would end with Priscilla. We are asking, why is effective fixed asset management critical for driving organizational value? Let's hear from you, Randolph.
Thank you, Benjamin. If you take a look at the total assets of companies listed on the Ghana Stock Exchange, you realize that about 25% of the total assets is fixed asset or PPE, right? Looking at some companies on the Fortune 500, Walmart, Google, Amazon, and the rest, their average fixed asset is between the range of 30 to 40%. So that is significant. That is not something that any business can take for granted. Why do businesses exist? Businesses exist to generate value, and businesses get compensated for the value they generate. How do businesses generate value? Businesses generate value by leveraging their assets, and fixed asset is key. Indeed, when you look at how the ISO 55000 series defines an asset, the key definition or the underlining principle is value creation. The IFRSs also talk of generating future economic benefit, which is also value. So what it means is that for a business to generate value, the business needs its fixed assets, because it is through that the businesses generate value. Hence, no business can take their fixed asset management, effective fixed asset management for granted. If you do that, you do that at your own peril. It is no surprising that businesses that don't take their effective asset management performances decline. Because if you do that, you stand the risk of you going in extinction. And therefore, it is very, very critical. If you don't manage your fixed assets well, your return on investment may even go down. We do look at in business some of the KPIs, return on assets and the rest. So you cannot toy with such a significant element if you look at your books. 25% based on the Ghana Stock Exchange statistics, right? You cannot toy with that. And if you want to thrive, you want to continue generating value, and you want to do well as a business, then it means that you need to pay attention to this critical component of your business, which is huge in what you do. So for me, looking at the size of asset, the size of asset or fixed asset in a business, that alone should give businesses the drive to continue to effectively manage it so that they can continue to generate value. Without that, they can't generate the value that they seek to generate. Thank you.
Right. Thank you, Randolph. So businesses need fixed asset to be able to generate value, and then effectively managing them result in enhancing return on investment. Let's hear from you, Stephen.
So thank you. Now that Randolph has set the tone, let me add to what he has already indicated. I've done a number of trainings on fixed asset management, and also the work that we have done so far. If you engage clients about why assets place so value on the organization, some of the things that they do say is about the financial accuracy. And then the financial accuracy talks about the credibility and reliability of financial information. Stakeholders alike will need the report to make an informed decisions. And if the information is inaccurate, then it will mislead everybody, hence inaccurate decision. And one of the things that we need to note is that when information is inaccurate, it affects everything. For example, when expenses are incorrectly classified as fixed assets, this will distort financial statement and also the profit. The profit will be overstated because the expenses that should have been subtracted from the revenue to arrive at a profit is not there. It has been added to fixed asset, and therefore fixed asset will be overstated. This will mislead stakeholders to make an informed decision. And this is so critical that they will make bad decision and it will go a long way to affect the organization. So a few things that we need to note if you want to streamline and ensure that our financial information is accurate. One is to standardize fixed asset capturing template so that you can use a structured approach to record fixed assets. You have to automate all depreciations. Fixed asset is not a responsibility of one department. It has to be collaborative effort across departments. You need to use the leading practice and principles and standards to guide you as you move along in compiling accurate information. You cannot get accurate information without doing regular verification and monitoring of assets. If you do this, then it will help us in no small measure. Other than that, the value that we are talking about, we can't derive the value from the asset. Again, you need to look at minimizing downtime of your asset. Why am I saying that? Downtime leads to the lost production, increased repair and maintenance expenses, and this can disrupt business activities. And all the more, it will affect profitability. Therefore, it is so crucial we pay attention to this while we minimize downtime so that it will enhance the value of the assets, the useful life. It will also help us. So key thing that we need to do is to ensure that proactive maintenance of these assets is being done. And that will go a long way to reduce cost. And that will enhance the value that we are talking about. Thank you.
Right. Thank you, Stephen, for that. You've been elaborate. What effectively managing fixed assets ensures that our financial reporting is accurate. Let's hear from you as well, Michael.
Thank you very much, Ben. I'll talk about two main things here. The first one being that having effective fixed asset management practices enhances an organization's visibility over its assets. And it does this by providing accurate and real-time information about the location of assets, their condition, usage, as well as their value. In other words, when an organization's asset management practices are effective, they are able to easily tell how many assets they have under their control, where these assets are located, and how the assets are performing. And all of these information, as Stephen just said, are necessary for making critical business decisions, such as capital budgeting, such as determining the optimal cycle for replacing assets, and also whether to buy assets or lease them. The second point I'll talk about here is the fact that having effective fixed asset management practices in place helps to minimize or mitigate the risk of loss or theft, or what has now become popularly known as ghost assets. This is where you have assets on your register, but you can't find them on field or on site, right? And so when an organization has effective fixed asset management practices in place, they are able to easily, they're able to make sure this does not happen. And in the unlikely event that it does, this is quickly detected
and the organization is able to roll out measures to make sure they don't continue or happen into the foreseeable future. Thank you very much.
Right. Thank you, Michael.
Thank you, Michael. You've mentioned that effectively managing fixed assets helps to mitigate the risk of having ghost assets, and that is a key concept we are taking. And let's hear from Priscilla as well. Why is effective fixed asset management critical for driving organizational value?
Thank you, Benjamin. So from the earlier speakers, it's obvious that it takes a great deal of financial commitment for organizations to invest in their required fixed assets. And so it's important that necessary steps are taken to ensure maximum value is obtained from these fixed assets. Now, let us also look at the kind of tax value the organization can glean from effectively managing its fixed assets. Now, planning is one key element of fixed asset management, and this helps management to obtain the most benefits when it comes to capital allowance claims in respect of its assets. Why do I say this? Planning helps management to be able to identify the right time to put specific assets to use. Mind you, when it comes to tax, merely owning an asset does not entitle the organization to capital allowance deduction. It requires the asset to be put to use in the generation of the business income of the organization. Now, determining the right time to apply these assets helps management to plan how much capital allowance would be claimed for each period to help supplement its plan towards its income tax liability. And so, for instance, if an entity is loss-making and already does not have an obligation to pay tax because it is in a loss-making position, it's not eager to claim high capital allowance because it will only add to your losses. In this case, if there's no immediate need to put the asset to use, management can decide to defer the usage of the assets to later years when it is probably projected to make profits. In that case, the usage of the assets during those years would now entitle the entity to claim capital allowance on those assets to reduce its income tax liability. That is one. Also, planning as an effective asset management mechanism helps management to be able to optimize capital allowance, or rather to say, cut down on potential losses in capital allowance. Why do I say this? I say this because in capital allowance, some assets have restrictions to the extent that the entity is not able to claim full deduction for the cost incurred in acquiring the assets. For instance, it's motor vehicle. The law places a cap of 75,000 as the maximum deduction that can be made in respect of a motor vehicle. Now, based on this deduction, you know that if you buy a motor vehicle that costs more than 75,000, you are only limited to 75,000 in terms of capital allowance. However, there are some exceptions to this rule. And so it's important that when an entity is out there looking for a motor vehicle to buy for its business operation, emphasis is placed on vehicles that are equally efficient and able to deliver the use or the kind of operation that the entity is going to put the vehicle to. Place more emphasis on its efficiency rather than luxury, because luxury will cost you more, yet you cannot recover the entire value through capital allowance. So this is one thing to note. Another thing I want to mention is the maintenance culture. We know that maintenance is key to maintaining fixed assets. What does that entitle you when it comes to tax? So the tax laws encourages entities to invest in maintaining and repairing or even improving their assets, because there's value in all of these exercises. It ensures longevity to the life of the assets. And then the law also grants deduction in full when it comes to these expenses that you will incur repairing, maintaining, and improving your assets. And so at the end of the day, a company that has that maintenance culture enjoys the full value of their assets, including the tax benefits of getting a deduction for these expenses. And so it's an encouragement for management to ensure that they have that continuous and consistent maintenance of its fixed assets. And so I'd like to end here for this particular one. Over to you, Benjamin.
Right. Thank you, Priscilla. I think one key thing I pick is that effectively managing your fixed assets helps you in better planning, not only your acquisition and disposal of assets, but also the usage and also maintenance. Thank you very much for that. Next, we will talk about challenges that businesses face when it comes to managing their fixed assets. But before we do that, I mentioned earlier that we gathered some insights from participants. So we take an opportunity to discuss this and then lead on to the next session. On here, we asked participants the biggest challenges that they face when managing fixed assets in their various organizations. What came out is that about 23% highlight inaccurate asset records as their biggest challenge. This is followed by ineffective asset acquisition, maintenance, and disposal practices. We also note that about 19% have the lack of real-time visibility or asset tracking as their challenge. 13% indicate issues with compliance with tax and regulatory requirements. Other challenges that were highlighted is difficulty with integrating fixed asset systems with accounting systems, and then inadequate staff training and expertise. Having mentioned these, let's hear from Randolph. First of all, are these insights surprising? And based on your experience working with a number of clients, what are the most common challenges that organizations face in managing their fixed assets?
Thank you, Benjamin. These insights or feedback are not surprising. I must say that it's a reflection of what we have seen over the years in inaccurate asset records. We see that a lot. When Michael was making his submission, he mentioned ghost asset. In Ghana, we know ghost names in payroll. But I think if you look at fixed asset, ghost asset is very, 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 very common. So all these are things that we see, but I will touch on two key things that I've also seen in practice, right? So I see that a lot of businesses are not they are not leveraging any framework in the management of their assets. So it's more or less disjointed. And that is very, very, very common. There is the ISO 55000 series, which is an asset management framework that businesses can adopt, but you don't see that in practice. What you often see is that because normally for the accounting side, you have to record the cost, you have to calculate the depreciation and stuff. The accountants have some sort of a solution that they are leveraging, right? But that does not help in the entire management of the fixed asset life cycle. So there is no asset framework. So you see a disjoint between strategy and asset acquisition. Sometimes businesses are making some decisions and how that or purchases of fixed asset, how that links up to strategy, you can't really put the two together. And that is because there is no common umbrella or a framework that is guiding the asset decision making. And that is something that I see in practice in Ghana. A lot of businesses are not operating, as far as their fixed asset is concerned, using or leveraging any asset management frameworks. So that is one common thing that I have seen in my work in the fixed asset space. Then two, technology. Technology is also very not much leverage. The aspect that is heavily leveraged is maybe for the recording of assets, calculating of depreciation, that you see a lot of businesses on the finance function side using some tech, because a lot of businesses have accounting systems or ERP systems that have some capability to do the accounting side of things. But then if you look at it from an entire asset lifecycle management point of view, it is missing. So from planning acquisition to retirement of the asset, you can tell that businesses are just focusing on the reporting bit. And so technology is not being leveraged a lot in the management of fixed asset, and that is leading to a lot of these issues that you see here. So tech is missing. There is no proper framework that businesses are leveraging in the management of their fixed asset, and the implications are dire, because what that does is that your reporting financial wise is inaccurate reporting. So the credibility of the report become an issue. Then also you see that, I see that in practice a lot, protracted audits. Auditors are asking you for schedules, you can't produce them. Auditors must verify the existence of asset, they can't, because you are not able to give them schedules to tell them where your assets are and the rest. And so that protracts your audit. It also becomes costly, your operation cost. You're not maintaining these things well, so your cost of operation itself goes out. So that is some of the impact of these challenges on businesses. So for me, two key things: non-existent framework and not applying technology is two common things that I see in practice. Thank you.
Right. Thank you, Randolph, for that. You have summarized it quite well. Now, Priscilla, from a tax perspective, right, what are some of the common challenges that you'd want to highlight?
Okay, thank you, Benjamin. Yeah, so in fact, the number one point on the screen is one that we experience in our practice. When records are poorly kept, it becomes difficult to get the right capital allowance claimed and even plan around optimum capital allowance. So as for records or accurate records, it is key, but it's also a practical challenge that we see in our day-to-day encounter with clients. This comes in to bite the entity in an audit, for instance, when GRA decides to check the existence of these assets, check the supporting records, invoices that back the ownership of these records. When they do not exist, all those assets will be taken out of your capital allowance schedule, and you'll be left with only the ones you can support. This tells you how much value you are losing in terms of capital allowance claim. And so it's very important. Secondly, there's also the knowledge to classify assets properly in capital allowance. Various assets are classified differently according to the Income Tax Act. Now, if they are improperly classified, an asset that ordinarily should have been depreciated for, let's say, a reducing balance of 20%, if misclassified to a different class, will probably stay in the pool longer than expected. The reverse is equally true. All of that creates the challenges for the entity when the day of accountability comes with GRA. And so you'd want to avoid such troubles going forward by learning to classify the assets in their right classes or the right capital allowance to be claimed. Also, I'd like to mention capping of the assets, which I initially mentioned in my opening remarks. That imagine buying a motor vehicle for about 200,000, but because of lack of knowledge, you have decided to capitalize the entire 200,000 in your capital allowance, which is wrong. That vehicle ordinarily should have gone for 75,000. You have taken additional value of 125,000, which later will be taken away from you. And this will come with interest. And so you realize that these challenges come later on to bite the entity. Now, how do we address such challenges? We are saying that you need to train your staff. Train your staff and ensure that they know exactly what they are doing and not just probably completing templates and making mistakes left, right, center. Also ensure that the same staff attend seminars and trainings to ensure they stay up to date with the changing tax landscape. Because for tax, if there's something we know that will forever change is our tax environment. Every time the finance minister comes to read the budget to us, we always have expectation that there will be something about taxation. And so it's important that your staff stay up to date with new laws, amendments, and everything around the tax compliance of the entity. Also, we are recommending that you should stay close to GRA. They are the implementing entity or agency of the government. Stay close to them. Engage them on areas of concerns where you are not clear how to apply the law. You can equally follow and read their practice notes, which gives you an idea of what the Commissioner General's position is on certain provisions of the Act. It guides you to make sure that you reduce your mistakes. But of course, we have tax experts, which you can also engage. Tax experts will help provide clarity on issues you are concerned with, will help you even obtain private rulings on controversial ones, which would impact your business. So it helps you stay on course in terms of complying with tax and avoiding the expensive risk of getting in trouble with GRA during an audit. Thank you, Benjamin.
Right, thank you, Priscilla. I think beyond highlighting the challenges, you have also helped us with how we can overcome them. Now to Stephen. We're still in the spirit of how do we address the challenges? What are the key steps that organizations should take to be able to optimize their asset management lifecycle?
Thank you, Ben. And to add to what my colleagues have said about the challenges that we've identified, steps that we can take. One key thing that all of us have to note is that in organizations, we have finance department, engineering department, production, and so on and so forth. We don't pay attention to asset management. So in this webinar, I want us to note that we should classify asset management as a strategic function and tool, and necessary resources should be assigned to it so that we can manage our assets effectively. We have realized that there are so much value that we can derive from assets, but if you don't manage it well, it will affect us in no small measure. Again, we need to integrate ISO 55000 into our everyday asset management in our organization. Under that, we need to ensure that we have leadership which assigns roles and responsibilities to various people who are working on that. Again, they have to ensure that people have been adequately trained, and also culture should also be ensured. Again, we need to develop policies and procedures and embed controls. How? Policies, procedure, how things should be done. For example, maker checker. If you are going to buy an asset, who should buy an asset? At what particular amount? that you can approve? For example, finance director can approve, or the CEO can approve. Is it every amount that such people can approve? We have to embed controls so that things will be done in orderly manner in order to enhance the value of the organization. If you are disposing of assets, who should initiate? Who should review? Who should approve? Do we have right structures in place to ensure that assets have been reviewed, assets have been approved, and before the disposal committee, for example, sell these items off? I have realized in our dealings, we have realized that a number of companies do not pay attention to policies and procedures, and therefore a lot of things happen. They go unnoticed. By the time they realize, a lot of things have happened. Again, performing periodic asset verification and tagging, as well as the review of asset register. It is so essential. If you verify assets regularly, when assets are gone unnoticed, like we indicated earlier, ghost assets, we can quickly notify our respective people that such and such assets cannot be found. When we target assets, the assets, it's helping us to minimize risk. Movement of assets from one department to another, we can easily trace it. We know that asset, per our experience, assets register, most of the organization, they don't have it, and those that have, it is poorly done. But it is expected that we review asset register regularly. Once we review this regularly, we can have figures, depreciation, and then carrying amount that are so relevant that will conform to the financial accuracy that I spoke about. That will also enhance the value of the asset. Again, it is a coordinated effort among departments within the organization. It is not assigned to one department. Everybody has to bring what they have on board. For example, when we buy asset, we assign it to a certain department. They have to ensure its maintenance, its regular use. And the last point that I want to say here is about implement preventive, proactive, and predictive maintenance of fixed assets. You need to regularly subject assets to assessment to identify areas that are likely to be impaired or likely to be maintained so that we can deploy relevant people to go and maintain them, service them, so that the assets can exist longer and we can enjoy economic benefit even beyond the expected useful life. That will also reduce cost drastically within the organization. So I'll pause here for now.
Right, Stevie, thank you. Thank you very much for that. So what you have shared and what I picked from it is that if we should consider asset management as a strategic function, and among the many things that we can do, we should integrate standardization into our asset management practices. And the sure recommendation is to use ISO 55000. Right, next we will talk about asset management practices. Before we do that, let's quickly look at some of the insights that were gathered. We asked you to indicate the tools or methods that you use for managing your fixed assets in your various organizations. It was revealed that about 64% of organizations use spreadsheet. Again, we have 15% using specific models within their ERP system for managing their fixed assets. 10% are still using paper-based records for that. We have 8% having a dedicated asset management software and 4% using other means. Again, We asked the methods that your organizations use for tagging your assets. What was revealed is that about 58% of organizations are using marker systems. 25% are using barcodes, 14% using aluminum tags, and only 3% using radio frequency identification, RFIDs. Now, with these insights, let's speak to Randolph. What is your overall comment on these insights? And what are some of the technologies that you would deem effective for improving assets tracking and reporting?
Thank you, Benjamin. So I think this is a true reflection of what we've also seen in practice. So what it tells is that in Ghana, largely we are behind. If you look at the data from the tax as well as the kind of system, 64% of our respondents using spreadsheets. That does not guarantee you a lot, and it doesn't give you the needed, or it doesn't help you to address all the requisite issues that has been mentioned earlier. And when it comes to the tagging as well, marker system, 58%. You can imagine that's a bit archaic. So it's a reflection. We've seen that visiting clients, implementing asset management systems for them. We see this, and some have transitioned to other things. In terms of technologies now, so let's look at maybe the emerging tech now. Now, in terms of tagging, it's the RFID that I would say is trending globally now. And that's the radio frequency identification, because of the ability for it to help you to either do real-time tracking of the asset or to get some real-time insight. And even when it comes to your periodic audit, the ability to leverage that to enhance your audit. You don't have to go around doing your counts, but you can leverage technology to really help you to count your asset in no time. So that's really trending, and there are a lot of GPS or real-time tracking solutions that people are looking at. So that is at the higher end. And also for that, it's expensive. So not a lot of business can afford that. What I have seen in practice is that some businesses have a blend of solutions. So you can look at the kind of asset you want to track in real time and maybe leverage an RFID or a GPS tracking system for, because of the significant value of that asset. Then you also see, in terms of tagging technologies, the aluminum tags, whether it is barcode encrypted or QR code encrypted on the aluminum tags as well. We are seeing that, and that's quite also popular. Then some are using maybe polyester tags and other kind of tags. So in terms of the tagging technologies, these are the things that we are seeing in the market. But beyond the tags, then comes the software side. And the software side, there are purposely built fixed asset management solutions that can help you to manage the entire value chain of the asset. And that works hand in hand with some of the tagging technology. So if you get an RFID, mostly you need to have an asset management or fixed asset management software that talks with that particular solution. Almost all the tagging technology, you need an asset management system that helps you to really manage the entire life cycle of the asset. So RFID is leading now, and then you come to the aluminum codes with different variation of that. So these are some of the technologies that are making waves now. So maybe the question to the audience is, if you look at your business, which of these technologies are you leveraging? And if you have a software and ERP system, what part of the life cycle management is it helping you to address? Should you be looking at a purposely built solution, that fixed asset management solution that you can integrate with your accounting system based on the life cycle management of the assets? So these are things that you need to think about. And leading organizations are looking at fixed asset solutions, whether technology, physical tagging solutions, or softwares that helps them to manage the process end to end. And that is really the future. And that's what we need to be looking at. Thank you.
Right. Thank you for that, Randolph. I see that we have some of our participants putting up their hands. You are encouraged to put your question in the chat. We will open the floor for the panelists to address them. Next, we will speak to Michael. We have a lot of accountants on here. And so to them, what is most important is how does it impact reporting? And so we are asking Michael, how can effective fixed asset management improve financial reporting, and most especially help in complying with IFRSs and the EPSAs?
Okay, Ben, thank you very much for that question. I think it's important to say here that one of the main variables we use in assessing the effectiveness of an organization's fixed asset management practices is compliance, whether compliance with regulatory requirements or accounting standards. Okay, so compliance is a defining factor in determining or assessing an organization's the effectiveness of an organization's fixed asset management practices. And I think this is it's important to establish that relationship as it puts things in the right perspective. But having said that, I can name about 3 things that I know would help improve financial reporting when our fixed asset management practices are effective. The first one being that when an organization has effective fixed asset management practices in place, they are able to value or report their assets in accordance with accounting standards, right? And secondly, it also helps to make available audit trails to meet GRA and other accounting standards disclosure requirements. Ultimately, these help to minimize errors in financial statements, okay, thereby ultimately improving the quality or credibility of our financial statements. So Ben, I'll pause here and hand over to you.
Right, thank you, Michael. And so I think one of the key things I pick it that is that compliance is a defining factor for evaluating success of an organization's fixed asset management practices. I think key thing you've also highlighted is that effectively managing your fixed assets provide audit trails, which enhances your transparency so that you can be able to meet the GRA on other audit queries. Let's hear from Priscilla as well. From a tax perspective, in what ways can effective fixed asset management support tax planning and also unlock opportunities?
Okay, thank you. So Benjamin, you see, when it comes to effective fixed asset management, as we have discussed here, it is almost given that when you are able to effectively manage your fixed assets, management is assured of accuracy, has visibility and control over the asset data for better decision making. Of what benefits is this to the business? Of course, accurate fixed asset data would feed into what a business would call its capital allowance schedule. So it's like garbage in, garbage out. If you do not have accurate data, there's no way your capital allowance would also be accurate. And so it has implications on the accuracy of your capital allowance claimed. Also, in terms of accuracy, periodic updates are important to ensure that As assets are acquired in the course of the years and others are getting sold along the line, the records are updated to reflect the true state of the assets for the business. Now, when you look at the tax angle of this updated capital allowance register, the fixed asset register, it ensures that the sold assets are gone off your capital allowance schedule, and then the newly introduced assets equally are included. And so with time, along the line, because your records are always up to date, you are equally in compliance with the capital allowance that you claim as a business. You avoid trouble with GRA. Also, in terms of visibility, having visibility over fixed asset data allows management to adequately plan towards future asset needs for the business. Effective planning also helps to claim optimum capital allowance and at the right time. So as I mentioned earlier, if you are able to plan effectively towards acquiring and putting to use assets, you are able to also plan how much capital allowance these assets will bring in and at what time for optimum planning for the most use. Because if you have the chance to delay the claim of capital allowance, then you have control. It gives you that control to be able to determine when to put the asset to use and so to begin claiming capital allowance thereon. Last but not the least, proper documentation of fixed assets, including the retention of evidence of acquisition, all of that helps the organization to be audit ready. These days, GRA has been embarking on routine tax audits on taxpayers. And so if you have ever been in the midst of a GRA tax audit, you would appreciate that every little detail is important to the success and smooth running of your audits. So as much as possible, if you can maintain accurate fixed asset data, it goes a long way to put you ahead when it comes to GRA audits, and you would have a smoother encounter with GRA. Thank you, Benjamin.
All right, thank you very much, Priscilla. So once we effectively manage our fixed assets, accuracy is assured. And then again, we should venture or ensure that we have proper documentation for our assets. I'll mention also that if you have any questions, put them in the chat. We will get our panelists to respond. Let's hear from Michael. Organizations wish to always know how well they are doing. And so what is the basis for determining performance when it comes to managing their fixed assets? Kindly share with us, what are some of the key metrics or KPIs that organizations can use to evaluate the success of their fixed asset management practices?
Okay, Ben. Thank you once again. I'll talk about 4 of such matrices. In reality, there are some more, but I believe if organizations are able to start with these 4 alone, they will get off a good start. The first one is the asset downtime. And what this metric does is that it measures the time assets are out of service due to breakdowns or maintenance. The second one is what is known as the asset utilization rate, which is almost the opposite of the asset downtime metric, as this measures how much of an asset's available capacity is actually used. With Reynolds being said earlier that the purpose of holding assets is to generate economic benefit or value, and such benefit is only derived when an asset is being put to use. So a metric like this is very useful in ascertaining whether assets are being underutilized or not. The third one, which is an accounting ratio or metric that most of us may be familiar with, is the return on assets. What this metric measures is how efficiently the company uses its assets to generate profit. Okay, and so this is also very key in assessing how well our assets are performing. The last one that I'll talk about is known as the maintenance cost. Okay. This metric monitors the expenses that we incur for preventive and corrective maintenance of our fixed assets. Is that okay? And generally, or holding all other factors constant, a low cost or maintenance cost is suggestive of efficient maintenance strategies. The truth is that other factors may contribute to why your maintenance cost may be low. Okay. For instance, if the organization is not maintaining its assets, we would expect that its cost will be low. And that is why we tread cautiously here. But holding all other factors constant, low maintenance cost is suggestive of the efficient maintenance strategies. So there is a very common statement statement now that what measures gets done. Okay, and so it's very important that organizations use such metrics to obtain insight about how their fixed assets are performing, so that on the basis of such information, they can make very informed decisions for the growth of the business. Thank you very much, John.
Ben, you are muted.
Right. Thank you, Michael, for that. Finally, we will look at the insights we gathered from our participants. We asked how you would describe the effectiveness of your organization's existing fixed asset management practices. You were asked to rank between from 1 to 5, with 1 being very poor and 5 being excellent. What was revealed is that about 13% of respondents deemed their fixed asset management practices very poor. 28% are saying that it is generally fair. 40% deem it as good. We have 16% saying it is very good, and 3% indicating their fixed asset management practices as excellent. Now, we will take final responses from Stephen and then Randolph. For CFOs or accountants or persons with responsibility over fixed assets, if you are to give one piece of advice, what would it be? Let's hear from you, Stephen.
Okay, thank you, Ben, for that question. Based on the given presentation and challenges that we have presented so far, I believe integrating ISO 55000 will go a long way to help organizations. The 55000 talks about asset management overview and principles. 55001 that talks about asset management systems. And then 55002 talks about guidelines for its implementation. This standard ISO 55000 is applicable to all types of organizations and regardless of its size. It is used by entities, that have a lot of fixed assets. Once you are able to do that, it will go a long way to help you. Because it will help you to connect your asset that you are buying to that of the organizational objective that you intend to achieve. And in order to align specifically, these 4 things, we need to take note of them. Remember, at the moment, most of us are doing things disjointly. And therefore, for us to connect things properly, we need to align. Assets that we are buying, can they enhance the value of the organizations? Can they help us to achieve financial objectives, non-financial objectives? Can it help us to even enhance our processes and our activities that we do within the organization. Assurance. Do we have right checks in place? Do we have proper KPIs in place? Can we measure them? And when we measure and we see any results, can we take effective measures? And once we do this, I mean, it will enhance the value of the organization. So some of the organizations are disjointed, but the way to enhance is to use ISO 55000 that will connect every asset that we buy in order to achieve the organizational objective that they want to achieve. And that will enhance the value of the organization. Remember, the last point is to do training, training, and training. Thank you.
Right. Thank you, Stephen, for that. And so you've been generous in giving us even more than one. So you are saying that we should integrate ISO 55000, which is a standardization for asset management practices. And then again, you end with staff training. You should train our staff and train again. Let's hear from Randolph as well. What is your one piece of advice to persons with fixed asset responsibility?
One piece of advice would be, I would say, to transform. I would see that the advice I'm giving is to say to transform your fixed asset management. You need technology, and more technology. If you look at the entire life cycle of a fixed asset, then and to manage that effectively, you cannot do that without technology. That is the way to go. Leading organizations are doing that. And if you want to extract value from your fixed asset and be ahead of the curve, then you definitely must leverage technology. So for me, it is technology, and technology. So the question is for all the people here, what kind of technology are you leveraging in the management of your fixed asset? Is it helping you to do everything end to end, or is just helping you to do some things here? And that is why I'm saying transformation. You need something that can help you to transform the entire value chain as far as fixed asset management is concerned. And you cannot do that without technology. So again, technology, and more tech. That will be my one piece of advice. Thank you.
All right. Thank you very much, Randolph. I'll repeat to say technology, technology. We will then move into our Q&A session. For those of us who still have questions but are yet to put it in the chat, kindly use this period to do so. So I think we have quite a few questions here. So the first question here, this is from Kwame Odumen. He says, do you recommend that company vehicles are tagged for fixed asset register purposes and utilization? Let's have Randolph to take this.
Yeah, thank you, Benjamin. And the answer is absolutely yes for me. It's a yes. I've assisted companies in fixed asset enhancing or transforming their fixed asset management, and as part of that process, we tag their vehicles. And vehicle is significant. It's something that the cost for almost every business here. I mean, some businesses, maybe in the mining and oil and gas, the cost of vehicle may not be too significant as compared to other assets that they own. But for a number of organizations here in Ghana, vehicle will be a key cost item, right? And therefore, if you have that, you need to target. And there are ways to go about to target and to track it. So you know all the things that are happening. So for my response to Kwame is that yes, your vehicles must be tagged. it must be tagged so that you can properly identify them. Yes, you may say, oh, but the vehicle has vehicle numbers, but you have to tag them.
Right. Thank you for that. You have to tag. There's another question from Abdul. Right. Abdul is asking, how do you handle fully depreciated asset in your pool? Let's take Michael to respond to this.
Okay. Thank you very much, Abdul. So I can think of many ways here. It depends. If the asset is still in use, okay, if the asset is still in use, you can keep the asset in your books and also in use, all right, but at zero value. That is allowed under accounting standards, all right. Some organizations have the practice of considering all of such assets for disposal, okay, and so if it is your case, if that applies to you also, particularly with regards to let's say computers, all right. For most organizations, once the computers are fully depreciated, they consider them for disposals. All right. And so if that applies to your organization, then the necessary steps have to be followed. Okay. You may decide, not you may decide, there's a need to evaluate such requests for disposals. And then once approvals are given by authorized persons, the steps are taken to dispose of the assets. And let's make sure that assets that are disposed of eventually are retired from our register. We want to avoid, this is one of the ways those assets are created. Okay, and so we want to avoid a situation where the asset has been decommissioned and taken off service, but are still in our books. All right, then we are going to have discrepancies between what we have in our records and what is on site. So these are some of ways you can consider in handling or dealing with fully depreciated assets in your pool. Thank you very much, Abdul.
So Benjamin, I just want to add a bit to what
Thank you
Michael
very
just
much,
said. So
Michael, for the response. So I think the next
Benjamin,
question is
Benjamin,
from
I wanted to add.
Emmanuel Sechi.
I think Randolph wanted to add his voice.
I just want to add.
Right.
I just want to add on to what Michael said. Thanks. So for me,
yes.
Abdul, at this point is decision point, right? So how do you even determine or how do you get insight on these assets from your system? So these assets that are fully depreciated, I mean, if you want to continue using them, what is helping you to make that decision? Do you have relevant information on them? What is the cost that you've incurred on these assets over the years? Have you been tracking this? Because as we have stated from the beginning, asset must give you value. If you are spending more on these assets than the benefit that is coming to you, then obviously, you know, you must make a decision to say retire. But the question for me is, at this particular point in time, what kind of information, what is the quality of insight and information you have on your fully depreciated asset? Because when you have that information, it helps you to know how to deal with these assets, whether to continue to put them in use, even if you decide to sell them, the price at which you are to sell them, because you have good information on these assets. So if you are selling, you will not be shortchanging yourself. You know that you can sell at this price because of the information that you have on these assets. So what is the quality of information you have on these assets? If you have that, it is easier to help you to even take a decision on how to deal with these fully depreciated assets in your pool. Thank you.
Right, thank you, Randolph. Priscilla, you wanted to make a submission as well. Would you make your submission now?
Yes. Okay, so I just wanted to bring in the tax angle here. Fine, it's right that in terms of accounting, the depreciation rates, the asset would have outlived its life, and so you would say it's fully depreciated. Let's be mindful that when it comes to capital allowance, the rates might differ. And so to the extent that the asset has not been sold, it will still remain in capital allowance for the entire period until it runs out fully. Whilst you are also monitoring its life, especially for assets that are reported as single assets, like class 4 asset buildings, you can track the value of the asset over its life in capital allowance to see how long. You even know when it will be fully utilized. Now, be mindful that there's a provision that allows for balancing allowance to be claimed. This occurs when the remaining balance on the assets is less than 500 cedis. The law says claim the remaining balance as capital allowance for that year, and the value of the pool or the assets will come to zero if you are able to determine that. So that's just one thing I wanted to bring up. You might not necessarily have to sell it if it still has value for the entity. And as long as the value has not run out of capital allowance, it will still run until it is fully utilized through capital allowance. Thank you.
All right, thank you, Priscilla. Unfortunately, we will not be able to respond to all questions. We have exceeded the time slated for the session, but let's kindly spare the next 5 minutes to respond to a few more questions. At this point, we take Emmanuel Sechi Hughes' question. And he's asking, with the rise in the use of RFID in fixed asset management, what are some risks associated with this and possible solutions if available? Randolph, can you take this question?
Hello, Benjamin. The question again, please.
I read the question. With the rise of the use of RFID in fixed asset management, what are some risks that are associated with this, and what are the possible solutions?
Okay, so in terms of some of the risks that from experience I have seen, so there are some RFIDs, for instance, that uses batteries, right? And the batteries at some point will run out, and when the batteries run out, it stops doing what it's supposed to do, transmitting information and giving you real-time update and the rest. You lose that. The way people are addressing with that is to leverage passive RFID. The active RFIDs are the ones that uses batteries. There are now passive RFIDs that does not use batteries, so it helps to cure some of the issues that active RFIDs have. And also, there are other things about if the number of RFIDs positioned at a place, sometimes there could be interferences because these are transmitting information via radio frequency. So if you have several of them at a place, then there could be interferences, and the value that you want to get from it, you may not extract that, or it can create confusion in the system. These, I think, emerging systems are now becoming finer. I think those were in the early days of RFID, you could see that, but now there are better RFIDs that you can have multiple of them here, and it would still transmit, and you will not have the issues that you have with. So if you ask me, maybe these are the two that I can mention for now. Thank you.
Right. Thank you. Thank you for the response. I think we will take one from Elizabeth. I think this is a question from someone addressed to her. It says, please, I will be grateful if you can help answer this. For startups, that make use of personal equipment as resources for raising the organization. How will such assets be recorded since it is both for corporate and personal use? Stephen, can we have you respond to this?
All right. Thank you so much for that question. You know, there is a fundamental principle about business that separation between personal items and then a company. So we are saying it's a personal use and then the startups. So at that time, you need to define the items that you are going to use for the business and record them as such. If you do that, it will help you in no small measure, rather than you use it for personal use, you use it for organizational use. You can do that, but if you do that, you also need to proportionately align what you are using for the organization and record it as such. And then the one that you are using for personal use also as such. And so that is the response I will provide for that.
Right. Thank you, Stephen, for that as well. I begged for 5 more minutes, and all too soon, the 5 minutes is exhausted. On this note, I'll thank our panelists for making themselves available to share these insights with us. It's been quite an insightful session. I've prepared quite a lot in terms of managing fixed assets, the entire life cycle. Thank you, panel participants, all those that we invited, all those that registered to be here and are actually here. Thank you very much. For those whose questions were unanswered, we have our panelists available even beyond this webinar. You can reach us out at any time so that we can further engage and get your questions answered. On this note, I'll say have a lovely afternoon and let's touch base again sometime.